welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. The market's holding at the top of the day. We've got 1% gains on both the indices. It's a good end to what we started in the morning. But let's take a look at the headlines for now. Markets are set to end the week on a high. The Nifty trades close to the 11,500 mark. All the sectoral indices, barring IT, trade with gains. The rupee stages a recovery from record lows for the second straight day in a row. And sugar stocks are trading with strong gains after the cabinet nod to hike ethanol prices and cane juice prices. And India's wholesale price index falls to about 4.5% in August, with food prices cooling off last month. But let's take a look at what's been happening in the markets, Neeraj.
Yeah, well, thanks for that, Devina. And I think you summed it up. It started off well and it's actually looking like it'll end off very well. An hour and a half left, but don't see any major disruptions or gyrations in the market. So the going is good. Thus far, trading almost at the highest point of the day. For the Nifty Bank as well, about 1.2% and no complaints out there whatsoever in or around the highest point of the day. The market breadth pretty active, so it clearly shows that the broader market performance has been pretty decent too. We've stayed stable for most part of the trading day today, so doing rather well. Just before we get into the heat map though, a quick check of what the world markets are doing. So Europe should come up on your screen just before we move on to the heat map, and just to see the world market scenario. And that's not too bad either. Remember, the news flow around the world markets has been rather positive the last couple of trading sessions. The heat map, and a lot of green, I'm sure. Maybe not as much as it was at the start of the trading day. At the start of the trading day, we only had 2 stocks or 3 stocks in the red. Now a bit more, but IT dominating the losers list. So HCL Tech, Infosys, TCS, Wipro, all of them down in the red. 4 of the top 5 losers are from the IT pack. But shift focus here. NBFCs have had a big move today. All marketing companies have had a big move today. Almost everything that was beaten down out of shape is bouncing back very, very strongly. So Indiabulls Housing Finance up 6% today. Remember, in the broader markets, M&M Financial has done rather well. OMCs, BP, HP, IOC, all of them doing well. Banks selectively have not done too poorly. The likes of Yes Bank, HDFC, IndusInd Bank, Bajaj Finance, Finserv, all of them. Again, the Bajaj twins beaten down a little bit in the month of September, bouncing back rather well for themselves in trade. But all in all, a lot of green, very little red, just the kind of market that a bull likes to see. Just a couple of pockets that I want to highlight at the broader end of the spectrum, to key trends thus far that I want to mark before I hand it over to Devina for what's happening at the broader end, on the more liquid space, that is, which is the FNO universe. So sweet gains for sugar names, and frankly, if you sort the BSE small cap index for the top gainers, the top 10 are sugar names. So pick up any sugar name and it would be in the green. The obvious ones haven't gained as much, but the smaller ones have certainly moved up very, very strongly in trade. So good going for the sugar names. Shriram Transport, Shriram City Union, RCF, all of these are stocks in use. Shriram Transport, despite the downgrade, not doing all that poorly. Shriram City Union, they're down about a couple of percentage points. And RCF, albeit has cooled off from the highs of the day, but still up about 9%. So not bad going. The land being transferred to MMRDA for development, doing something for this one. And last but not the least, some volume buzzers include a Den Networks. Remember, we were talking about this in the morning. It was up 3%. The buy call given there. The stock right now up about 17%. Kolte Patil up about 6.5%. Finorex Cables too about 6% kind of gains. So selectively, a bunch of these stocks are doing well. There would be losers, but really losers is not the focus of the day today. Devina, what are you spotting?
Well, on the futures and options side, the Nifty is gaining with some fresh additions there. But you are seeing the premium come off a bit on the Nifty futures. So about 32 odd points in terms of the Nifty futures premium to the spot market. But the focus still remains on the upside. So you are seeing a change of about 1.89% on the upside for the Nifty futures. Let's quickly pull up the Bank Nifty futures as well. And that is seeing a slight bit of a dip on the price is going up by 1%. So you are seeing some amount of short covering coming in there. Remember, this has been a trade that we've been talking about for the last 3 to 4 days, when the banks declined sharply and there would have been a possible comeback, and our technical analyst did recommend a buy on dips for the Bank Nifty. Aside from that, on the option side, let's quickly take a look at what's garnering more interest. So on the call side, today's action predominantly lies at the 11,400 strike, and for the puts, the open interest build up is currently at 11,500. So it's a pretty narrow base on an intraday basis, but nonetheless, if you go to see from a series perspective, your maximum put concentration on the downside lending some support is 11,400, while you still have the maximum call concentration at 11,800. Let's quickly take a look at now what's happening with individual stocks, and fresh long positions are being seen in stocks like Hindalco. That's seeing an open interest change of about 13% on a price increase of 3%. You've got about Finance, which is up about 11% in terms of the open interest change. You've got Ultratech Cement, that stock's gained about 1.5%, and the open interest change is 8%. Jindal Steel, Bank of Baroda, some of the other gainers. Stocks which are gaining on the back of shorts getting covered over the last few days, where the short build-up has been quite heavy, and the changes are there on the back of some shorts getting covered. M&M Finance is one, 20% change, a dip in the overall September futures. Tata Global Beverages, Godrej Industries, Indiabulls Housing Finance are some where you are seeing a dip in the open interest as well.
Okay, so let's talk about all the key newsmakers in the session today, and our research team Johnson in full strength to speak about some movers, some newsmakers and more. Yash Upadhyay, firstly to kickstart the set of newsmakers with what's happened in the sugar space, and why is it that the rally seems different than almost every other rally in the sugar space that we've seen over the last 5 or 6 years? Yash.
Yes, Neeraj. So on Wednesday, the government came out with the approval of hiking the ethanol prices across the different varieties. The most coming in from cane juice. So there, the prices have been increased by a quantum of 25% to 59 rupees per liter, as against 47.5 rupees per liter earlier. And for the B heavy molasses variant, where they have increased prices by about 10% to 52 rupees. Now, what this means is that it would make producing ethanol more viable for the sugar millers. And how does it do that? Basically, ethanol, to understand that, you need to understand how ethanol is being produced. So it roughly takes about 2 kilos of sugar to produce 1 liter of ethanol. So at current realizations for the industry, that stands at about 29 rupees per kg for sugar. At the prevailing rate, the realization for ethanol would be about 23.5 or 24 rupees, which means that the sugar millers were not given enough incentive to produce more ethanol, and they produced more sugar instead. As a result of the price hike, the realizations from ethanol will now stand more or less at par with sugar at about 29.5 rupees, which would mean that more cane would be diverted towards the production of ethanol rather than sugar, which would help in cutting down the excess production of sugar in the country. We are staring at a 35.5 million tons of expected sugar production in the next sugar season, which starts from October, the highest that the country has ever witnessed. And as a result of that, prices have been falling. They're down about 18% on a year-on-year basis. So with this, our interactions with the management and a lot of other industry peers suggest that in the near term, or at least in the next sugar season, sugar production will fall by about 0.6 to 0.75 million tons, which would be a big positive for the industry, as it would help give a support or cushion to the sugar prices, which are under severe pressure. Also, if you take a look at the government's move, this has been something which the government has been trying to do for a period of time. Even in the bailout package that they announced in June, there was a significant impetus given to the production of ethanol. So they had provided for loans to the tune of 400 crore rupees to the sugar millers for setting up new or expanding their existing distillery capacities, and bearing a maximum interest subvention of about 1,300 crore rupees. As of the latest marketing year, OMCs have tendered for ethanol well over 300 crore liters, as compared to the industry production of about 200 to 225 crore liters. So there is a clear demand-supply mismatch. As a result of this, there is a significant amount of investment that the industry is taking up. So Balrampur Chini and Triveni Engineering, two of the largest sugar millers in the country, they are expanding their capacity by about 160 kiloliter per year for an investment of about 200 crore rupees each. But this would be something that would not come up overnight or within the next 4 or 5 months. It would be something that would take about a sugar season from now. So the actual benefit of this move could come in the long term, which is what the industry has been asking for the longest time.
All right, Yash, thanks very much for that. The entire pack is abuzz with activity in today's session. But apart from sugar, another stock seeing strong traction is Indiabulls Housing Finance. In the morning, on a special segment, Bloomberg Edge, we had highlighted and indicated the potential upside in the stock based on its RSI. The stock is not only the top Nifty gainer, but has also gained the most in 2 months. Jayesh was a keen eye for all these stocks and gets it for us every morning on Bloomberg Edge. You know, you've spoken about many stocks, Jayesh, Bajaj Finance, Reliance, Balkrishna Industries, Titan, and now Indiabulls Finance. Tell us about it.
But Devina, what are the odds that it turns out to be the top Nifty gainer? Just to give you a recap of what we had highlighted in the morning was there was a possible uptrend suggestion by the relative strength index indicator, and also that, you know, it was happening at a very crucial level. So what you have on the chart is last 6 months of Indiabulls Housing Finance, and you can see this consolidation phase from May 15 till the July 16 or 15 thereabouts, and post which we had seen the stock rally from about 1150 right up to 1400 odd levels. And if you have a look at yesterday's close price or Wednesday's close price, it was just below the 1150 mark, which was in fact very close to the support area that it had bounced from in the past. So, you know, today we have seen a big move upwards, 6-7% on the upside. But today what has happened is interesting, is because in one single go it has in fact reached its 100-day moving average. Remember that the stock was in a downtrend and was trading below all its key moving averages, but with today's move it has in fact taken out the 100-day moving average, and with good volume as well. The last time I checked, 4 times the 20-day average volume that has already been done. And in fact, if the stock closes at current levels also, which is about 6 to 7% higher, this will be the biggest move that the stock sees in over 2 years. The last time we had a 6% plus move, that was way back in March 2016. So, you know, the relative strength index, which is the bottom panel, let's have a look at that as well and how it has actually performed. So May 15th is when it actually dipped below, and from there the stock rallied, and once again we saw that yesterday, or you know, in this week, the stock actually managed to dip below the green line, which is the oversold line, and today morning we had a sharp spike up, and currently at about nearly half of it, which is the equilibrium level for the relative strength index. So you know, further upside can be seen based on this particular indicator itself.
So the idea, of course, was to spot this in the morning. So for all of you who are looking at it and thinking that it's a lost opportunity, well, tune into Indian Open every morning at about 8:50. We get you Bloomberg Edge. Jesh, thanks for putting this into perspective. Well, so that's one stock that is done well. An important, interesting and interesting one case that is up and they've been at the board meet tomorrow for IL&FS, and crucial because remember they wanted to raise funds earlier, they couldn't do it. The meeting got postponed. Now it's happening tomorrow, and they are seeking to raise money, one via rights issue, 2 via loans from 2 of the shareholders, which is SBI and LIC. The importance of this is because if they do not succeed in getting some bit of money in permission, etc., and then the repayments that come in, we know that on Monday they defaulted in paying that 100 crores or 150 crores payment to SIDBI, but there are some large payments coming up during the course of the next 30 or 35 odd sessions, and if they do not get the money raised through rights issue or through otherwise through these lenders, then we are looking at the inability to be able to pay back to these institutions, and that might result in default and thereby haircuts for a clutch of mutual funds that hold the paper of various group entities of IL&FS. So mutual funds, banks and others. So I think we've already spoken at length about the mutual funds a week ago or 4-5 days ago, but that's why this meeting assumes a lot of significance. So, you know, just watch out for that. And in fact, I think Nomura put up a list of banks
that have exposure,
which have exposure, and Shraddha has been talking to us throughout the day, talking about what are the banks, what is the exposure, and how likely is the possibility of a default, if at all. And she's here to take us through the details and Nomura's rationale. Shraddha.
Right. So, Neeraj, what Nomura has said that out of the 91,000 crores of outstanding debt that the IL&FS group has, about 30 to 35% has been raised through debentures and CPs, and the remaining, which is about 57,000 crores, have been raised through bank loans. Now, out of this 57,000 crores, which it owes to various banks, Nomura has gotten the bank level exposure to the tune of about 36,500 crores. Now, of this 36,500 crores of debt, they estimate that PSU banks are holding nearly 70%. Private banks hold about 10%, and large institutions and LIC together hold about 20% of the debt. Now, even if you look at the bank-wise exposure to IL&FS as a percentage of the FY18 loans, you'll see that retail banks have negligible or nil exposure. So HDFC Bank, Kotak, IndusInd Bank, and even ICICI Bank for that matter don't really have exposure to IL&FS. Axis Bank has an exposure about 0.25% of the loans, and Yes Bank has an exposure which is the equivalent to about 0.1% of its FY18 loans. On the other hand, the exposure for PSUs is relatively higher, especially for the likes of Punjab National Bank, Bank of Baroda and Union Bank at anywhere between 50 to 100 basis points of their FY18 loan book. SBI's exposure is relatively lower at just 10 basis points, and Nomura believes that a part of it has already been recognized as an NPA by the bank. So while we'll have to see how this plays out for the bank, clearly this is one more area of pain which could arise for the banks, and you don't, while the overall percentage numbers up to 50 to 100 basis points may not really sound that much in the context of the kind of gross NPA ratios that some of these PSU banks are seeing, you don't really want even another 0.5% to add to your stress. So we will have to see how this plays out for the banks, but once again, it's more pain for PSU banks.
All right, Shraddha, thanks very much for that. Obviously, in light of that, you have listed entities, IL&FS Investment Managers, IL&FS Transport, both of them taking a brunt over the last few trading sessions. Today as well, one of the top losers, IL&FS Transport, is down about 4% odd. IL&FS Investment Managers, I think, is down even more, closer to 5% odd. All right, it's picked up from the lows of the day, but down about 4%. Let's talk about Voltas then. Along with Turkey-based Arçelik, it has launched the new brand Voltas Beko, which has launched a new range of home appliances in India. Let's discuss the prospects of the new launch with Pradeep Bakshi, the MD and CEO of the company. So thanks very much for joining us. Can we talk, before we talk about your JV, just to set the tone after what is perceived to be a weak summer, what has the demand been like?
You see, this year it was the summer season was a little muted. Unfortunately, summers did not set in time, and in the beginning itself, April month was quite a bit of low as far as consumer sentiments were concerned, because summers were not setting in. Post that, little bit it picked up somewhere around June, but then again, in large part of the country, the rainy season started, and unfortunately, because of that, because of weather playing a spoil sport, the industry has faced a bit of a headwinds as far as the compressor categories are concerned this year.
So what about the demand for white goods this quarter? Do you see that getting a push? What's been your reading on this?
Yes, yeah. See, I foresee a little bit of uptick coming in the festival quarter, because I'm sure there is a pent-up demand. The consumers who could not avail of due to some reason during the summer season, probably they will look up to the festival season, especially some of those people who try and renovate their houses during the festivity. Probably they will definitely be looking at either replacing or buying a new air conditioner, new refrigerator, a new washing machine for their houses. So I see that there can be a little bit of an uptick during this festival season.
All right, got that, sir. Let's talk about the joint venture with Arçelik now. What will be the first line of products that comes out from the JV?
Yeah, first line of products which we are bringing through this joint venture are going to be the refrigerators, frost-free refrigerator sizes, capacities of different, right from a smallest size of 230 litre up to the 720 litres. Besides this, we are coming up with the washing machines, both semi-automatic twin tub as well as fully automatic. And in the fully automatic segment also, we are having front load as well as top load fully automatic. So this is going to be there, and all capacities again right from 6.5 kgs up to 10 kgs of capacities which we are planning to introduce. Then dishwashers, then microwave ovens. Of course, going forward, we are also looking at hobs and hoods. So these are the products which will be made available for our consumers.
And so what's the outlook in terms of, the product planning from this joint venture for this FY and the following year?
You see, in the initial year, the plan for selling as far as refrigerators and washing machines and all other product categories are concerned, we are looking at roughly around, 500,000 products put together, including refrigerators and washing machines in the first year. I'm not talking about only the fiscal year, but the 1 year from the start of today. Because by next year around this time, we will also have our local production coming up. So we'll have that benefit of that also. And the larger segment, which is the direct cool refrigerator, will also get rolled out in the second quarter of next year. So we'll get benefited out of that as well.
All right. So we understand that Arcelec will come in on the R&D and the manufacturing side, and Voltas will leverage its distribution channels and marketing. How do you think this partnership is evolving on that front?
Yeah, your understanding is very right. So what both the partners are going to provide with is, the Voltas has got strength in the front end. Our channel distribution, sales, marketing, all this after sales service, supply chain, all this is our strength. As regards to our partners, they're very good into R&D, product designing, manufacturing capabilities. So and also they've got a proven track record across the globe. They've been catering to the appliances segment and various big brands across Middle East, across Africa, Europe, all these countries, and they enjoy a very large market share. So they've been able to come up to the product which are satisfying and providing delight to the consumer. So we thought it's a faster route to reach out to the consumers.
Right. So also, what are the JV's financial outlook and investments?
See, as regards to plan in terms of, I would like to share with you, over the next, up to 2025, what we are planning is, we want to reach out to a revenue target of 10,000 crores. We want to achieve a market share of 10%. We are infusing an investment of more than, 1,000 crores. And by next, 10 years from now, we would like to be brand leaders into each of the categories which we are, starting today.
All right, so one last question before we let you go. What has the impact been for you with regards to the depreciation of the Indian rupee? How have the input costs worked out for you? And in terms of the high commodity prices, how are you implementing that in terms of the impact on your margins?
Yeah, we see that actually with the dollar getting appreciated beyond expectations, there's definitely a pressure on the cost front. There is definitely a pressure on the margin front. But we remain committed to our consumers. So initially, we are not looking at any price hike whatsoever. We are going to introduce our product at a, firstly, we are going to provide them a value for money product, and we will try to be, competitive and affordable in the marketplace. We have to take off and we have to reach faster. However, what we want to do is, and how we are going to overcome this is, because right now a lot of imports are, being made for this category. We will ramp up our, production facility. We will do it up fast. We will come up with a factory, and we'll see that in the second quarter next year, this factory is up and running, and therefore we are able to bring down the cost, substantially through this manufacturing unit.
All right, Mr. Bakshi, we'll leave it at that. Thanks very much for joining in and giving us more details about this joint venture. The stock Voltas in today's session is up about 4.5%.
Well, arguably the most important event, though, of the week would be the Prime Minister taking stock of the Indian economy tomorrow. When the announcement came in day before yesterday, viewers would remember the rupee rallied quite significantly. What is within the realms of possibilities? Let's talk about all of this with Ida Duggal. She joins us right now. Ida, difficult to gauge, I guess, but what can happen? I mean, can there be some immediate steps that are taken to hopefully arrest the slide? The announcement itself has done that. Can there be more? Yeah, so sorry guys, I'm going to take 2 minutes to sort of separate two aspects to it. One is that do we need to react? And if we need to react, how do we need to react? I think till about 15 days back, the prevailing view in the market was that you don't need to react. All of this is normal. Fundamentals are changing, flows have changed, etc., etc., etc. The rupee is overvalued, so don't react. Then you took out 70, and at 70, the Reserve Bank of India did not come in a big way, and the market perception sort of changed very quickly. The sentiment changed very quickly. So you went from 70 to 73 almost in less than a month. Now that is when the view in the market changed to say that, okay, we do need to react in some way. So
there is now a belief that there is some reaction required. What kind of reaction is required? Is verbal intervention enough? Well, some ways the announcement of a review meeting was verbal intervention. The problem is that it came from bureaucracy. Had it come from, say, a finance minister saying that, the rupee is largely fairly valued, but we'll take stock, or if it had come from an RBI official, I think the market would have probably held on to that a little bit longer just in itself. It came from the bureaucracy, which now means that it will be doubted if something does not happen beyond that level of verbal intervention. So now, what is the intervention that can be done? This is a government review meeting from what we can understand. Within the remit of the government is measures like import duty changes. They could perhaps consider something on that front. But they've tried that in the past. They'd hiked, customs duty on certain goods, etc., consumer goods and all of that. I don't think that made a huge amount of difference. So could they consider something like that? Maybe. Beyond that, within the government's remit is, something like perhaps talking about tapping into NRIs, although the official announcement for that has to come in from the RBI again. Yeah. The only thing that the government can announce is a sovereign dollar bond issue, which I don't think anybody thinks it's a good idea right now. But those are the things that they can announce. What beyond that, everything beyond that is in the remit of the Reserve Bank of India, right? If you're talking about gradual interest rate hikes, just saying that, okay, the inflation story has changed because of the weaker rupee and we are hiking rates, that's going to happen at the MPC's end. If you're talking about, changes in ECB policy, in FPI policy on the debt side, again, that's in the remit of the Reserve Bank of India. If you come to an extreme, nuclear option, as people are calling it, of, sudden interest rate hikes like other emerging markets have done, again, within the remit of the MPC and the RBI. So what are they going to do tomorrow? If they do anything, I'm not entirely sure what that would be. Perhaps, if the finance minister comes out of that meeting and says that, we've taken stock, we don't think there's anything to worry about, if at all, the Reserve Bank of India can intervene in some ways. Maybe that would be enough, but it would have to come from the finance minister as opposed to a Mr. Garg or somebody who's been fronting these comments so far.
But I believe tomorrow's meet is not just to tackle the currency issue and what's been happening there. They've got broader issues which they're going to be highlighting and focusing on. So
oil, I guess. Yeah. But I think, again, all the anonymous comments that have been coming out suggest that they are not in favor of cutting duties on oil right now. Otherwise, I mean, from a growth inflation perspective, we don't have a problem right now, right? And neither do we have an extreme problem on the external front. All you need to do is balance the forex market in a way that the view is not one-sided. You will depreciate along with other currencies. We want to do that, right? I mean, just going to point out the real effective exchange rate for those who believe in that index. That's at about 114. Long run average is about 110. So there could be still people in the market who say that, a measured depreciation is still okay. The problem is the pace at which it was coming, and you needed to break that. Sorry, this is not a question that anybody asked, but should the Reserve Bank of India become a little bit more little less reticent? In the past, if you go back on the sidelines of some event, sidelines of some speech, an RBI person will make a comment saying that, the currency is broadly fair value, etc. And the market takes comfort from that. We just haven't seen that. And I suspect that if that had come at 70, 71, 69, whatever level they felt the need to do it at, things would have calmed down. Also, remember, we have $400 billion in reserves, 9 months of imports. We're comfortable. There's no problem, really.
I think that stems from the nature of our RBI governor. I mean, if you're talking about the Reserve Bank wanting to come out, I think he's kind of set the ball out there. But Ira, thanks for putting this into perspective. So maybe not too many concrete steps, but maybe some comments which could help soothe frayed nerves. So let's wait and watch. Thanks for putting that into perspective. Well, it could be an interesting day tomorrow. We'll of course be here, and if something material comes out, we'll be here covering that as well. And well, one of the factors that's probably prompted the Prime Minister to call a meeting is also the fuel prices. Whilst the states and the centre fight it out on who should cut rates, the fact is that state levies vary across a very wide range. Samit Sarkar is now here to take us through the top 5 and the bottom 5 states as per the VAT levied on the fuel. Samit.
So I'll start off with the states that charge the highest VAT rate in India on sale of petrol and diesel. So if you see, it's Maharashtra, Madhya Pradesh, Andhra Pradesh, Punjab and Telangana that charge the highest VAT rate on petrol and diesel. Now, Maharashtra has 2 different VAT rates. For Mumbai, Navi Mumbai and Thane, it charges 39.12% on petrol and 24.78% on diesel, while for the rest of the state, they charge 38.11% on petrol and 21.89% on diesel. Madhya Pradesh ranks in second as they charge nearly 35.78% VAT on petrol and 23.22% VAT on diesel. While the other states like Andhra Pradesh, Punjab and Telangana charge anything in the range of 33.31% to 35.77% on petrol, and on diesel they charge between 16.74% to 28.08%. Now on the least side, if you see, states like Meghalaya, Tripura, Arunachal Pradesh, Mizoram and Goa charge the least VAT rate on petrol and diesel. Now Goa charges only 16.66% VAT on petrol, that is less than half of what the VAT rate is in Mumbai. And for diesel they charge around 18.88%. Mizoram charges around 18.88% on petrol and 11.54% on diesel, while the other states like Arunachal Pradesh, Meghalaya and Tripura, they charge anything in the range of 20 to 23.15% on petrol, and on diesel they charge between 12.5 to 16.18% of VAT on diesel.
All right, Soumit, thanks very much for that. That's a quick update on the kind of taxes that are being levied on fuel across various states. Remember, we've been talking about how there is pressure on the government to go ahead and reduce the excise duty, which obviously the central government is not ready to do at this point. And every 2 rupee cut in petrol and diesel prices, would lead to revenue loss of closer to 30,000 crores. So that's a difficult decision to make. Let's talk more markets then and bring in our guest on the show. We've got Hadrien Mendonca. He's joining in right now from IIFL. We've got Brijesh Singh of StockAxis, who also joins us on the show. And later on, a fundamental call from Deepak Shenoy. But let's get to our technical analysts first. Let's talk about the Nifty and the levels that we should watch out for. Hadrien.
Yeah, hi, good afternoon. It is very important to note that, on Wednesday before the break, we actually saw a hammer pattern creation on the daily charts. And, from the daily, when you boil down to the hourly charts, that is the smaller time frame chart, we have, we are on the verge of a very good declining channel pattern breakout. Now, where does that point come on the spot levels is 11,500. Now, once we see that declining channel pattern breakout go through, which I'm really expecting. Above 11,500, we could add up another 100 points. Now, what will that 100 point do is take the Nifty towards 11,600 levels. And 11,600 level is something very, very important to watch out for. Why? Because it is the bearish head and shoulder formation which has happened over the past 3.5, 4 weeks. That is the top of the right shoulder. So 11,600 and breaching those resistance level is going to play a very vital role for the Nifty if it wants to resume and surpass its previous all-time high. Because if the 11,600 resistance is broken, which means we are going to negate the bearish head and shoulder pattern, and negation of any bearish pattern is considered as a double long, which means if you calculate the bearish head and shoulder pattern's size, it gives another 350 points on 11,600 level, which takes the Nifty towards 11,900, 11,950 zone. So that is the pathway which I am really expecting, provided the momentum that we are seeing in today's and Wednesday's session, manages to sustain, specifically above 11,500 closing. That's very important.
All right, Hadrien. We'll come to your stock-specific strategies in a moment, but let's quickly get in Brijesh Singh to talk about his call on the index. Brijesh.
Good afternoon, Divina. See, last time I was on your channel. That time I said that Nifty on a hourly chart, or say 4-hourly chart, had formed a lower highs formation, which has been a negative sign for a buyer side. So my call that time was to sell a Nifty at 11,450 with a stop loss of 11,500 and look for the target of 11,330. Anything below 11,330 on closing basis, we can see another 100 or 150 points of correction. But anyhow, on that specific day when Nifty had broken the level of 11,330, it went and made a low of 11,250, and after that we have seen a sharp V-shaped sort of recovery. Now in today's session also, from morning till now, the Nifty has formed a runaway gap formation, and which has been bullish until now, because if this sustain above 11,400, we might try to touch the previous swing high, that is 11,600. But anyhow, for a Monday or till Tuesday session, I'll suggest to be long on Nifty. Anything below 11,470 would be the buy side. The stop loss would be 11,430, and your target would be 11,555. This I'm assuming with the Nifty spot level.
Hadrien, what about your stock recommendations for the afternoon?
Yeah, so both are buys. The first one is Bajaj Auto. Mainly the reason here is because we have seen a falling channel pattern breakout on Bajaj Auto. Secondly, this is this is the second time in this week that Bajaj Auto has actually made an attempt to surpass its 200-day moving average. Now, once we see that average being sustained above, I think Bajaj Auto turns out to be a very good buy at these levels. I'm expecting a short-term target of 2980, and by placing a stop loss at 2860 levels. Second one is Voltas. We are seeing a very good consolidation breakout. In fact, the last 4 days, Voltas had gone nowhere. But if you see today's move, it is very strong with good volume participation. So I think it merits to buy Voltas even after a rally of 3.5%. Where I'm expecting a target of 630 in the short term with a stop loss at 603.
Okay, that's Voltas, and we just happen to speak to the management there as well. The stock's up 4%. Brijesh, quickly run through your strategies as well on Jindal Steel and Power and Tata Global.
See, no doubt metal counters are right now on the limelight, whether that be a SAIL, Jindal Steel or Power, JSW Steel. But if the chart has been concerned, Jindal Steel and Power charts are looking very fantastic for the short-term play or even for the longer-term play. Now, if we talk about the short-term play, any dip somewhere around 232, one can take a buy call. Your stop loss will be 225. Your target will be 252. The stock has been trading on a higher lows formation with increase in volume. Even the trend been seen, which is giving a bullish sign. If someone has a view of say 9 month plus horizon, then in that picture scenario, on a weekly chart, the stock has formed a bullish flag pattern, and the upper end of the bullish flag pattern, the trend, that stock has been trading over the trend line, which is giving a target of 360 plus. But in that picture scenario, your stop loss will be 180. But as for a very short term play, your target will be 252. Your stop loss will be 225. Another counter would be a Tata Global. Now the Tata Global on a short-term time frame chart has been trading on a downward channel slope, and but on the oscillator front of view, it has formed the higher bottom and which is giving a bullish view for the stocks. So somewhere around 233, one can take a buy call. Yeah, your stop loss will be 227. Your target will be 242.
Okay, gentlemen, stay on. So much more to talk about. Let's get in a fundamental voice on the show. Deepak Shenoy of Capitalmind with us with his thoughts. Deepak, today's rally smacks of all beaten down names getting a leg up due to short covering or otherwise, because it's also happening in the cash market. More of the same anticipated in the near term, because frankly the commentary until this announcement of the PM taking stock of the economy and the reversal in the currency not happening was looking very, very poor, but now suddenly the mood has changed.
Good afternoon, Neeraj. I think the mood has changed only today, and I think the rupee is also reversed substantially. It was really touching 73 yesterday, now it's below 72. So I think there is some kind of a expectation, especially of today's, I think, cabinet meeting, a follow-on meeting tomorrow, and some action might be taken in terms of maybe perhaps some more freedom in terms of reducing our export dependence or import dependence or increasing our exports. So I don't know whether this will result in any policy changes. Markets are quite positive. However, our problem has been more global rather than local or domestic defined. So we are actually, our currency is better performing than, say, a Brazilian real, a Russian ruble, the competing larger currencies, if you may, just not as good as China. But I feel that has a larger impact on India. So if the rupee continues its slide downwards, from Monday onwards, this rally will reverse. Much of it, I think, is perhaps normal market reversals. Some stocks which have fallen too much, perhaps correcting a little. Some stocks just getting a temporary reprieve. I won't read too much into this rally at this moment. I'll wait for the decisions to come around, and I think Monday onwards we'll have a better picture. of where at least the government is going to stand.
All right. That's the currency snapshot for you. So strength coming into today's session as well. 71.74 for the rupee. I believe that would be the highest point of the day for the currency. Deepak, how did you view the development within the sugar space and what the government has done out there with regards to the ethanol price hikes?
It's interesting from a perspective of substitution of some of the imports because we'll eventually import a little bit less, 10% less perhaps of crude versus and buy more from the farmers. However, it smacks more political than realistic because to buy ethanol, I think much of the impact is not going to be to new production. It's going to be to clear current extra buffers that all of the sugar companies have. The export quota didn't help at all. So hopefully this will help them at least clear excess buffers and provide some kind of a cash flow to farmers because they are not getting paid because the buffers are so much that sugar is not getting sold and therefore they're not getting their payments on time. So the political idea here seems to be that get the money in the hands of the farmers, even if it has to be a higher price right now because of the offsets. I believe this will be, it's not a very big, policy in terms of efficiency for vehicles because their efficiency actually comes down. And it doesn't change much in terms of prices because, the price of fuels are mostly related to taxes rather than, the raw material. So it's not going to be, the 59 rupee purchase of ethanol is not going to change the petrol price too much. So overall, the impact, will be in certain sugar producing states, but I don't see that as a mega long-term positive for current sugar companies or for bringing prices down of petrol per se.
Just focusing on some of the pharma names for today and just to, pull up the likes of a Dr. Reddy, Lupin, Sun Pharma and see how the day's performance has been 1 to 1.5% apiece. Remember, most have now started to factor in the outlook for growth in key markets like India and the US after the Q1 growth of about 14% in terms of revenue. This along with the depreciating currency works well for them. Earnings forecast to become a little bit more clear on the upside for some of these pharma majors. What are you doing, Deepak, within pharma?
We're actually, we've got a bunch of pharma names, that we're interested in. Some of them may not be hugely impacted by the rupee, like a MNC pharma company, like say Abbott or Sanofi or one of these guys. Some of the regular pharma names that are exporters, so Sun Pharma, for instance, has been seeing a mixed response from the FDA. FDA is currently, I think, examining one of their plants, and then they've given them a smaller set of observations on Halol. So there is some potential in the next 6 months that will allow them to open those plants again for the US. There is a bunch of other companies here. There's Oro, there is smaller API manufacturers like Unichem, there's Strides. I think they all will benefit in a certain way compared with the dollar equation working out in their favor. But I still think the recovery, a true recovery, is going to be about 6 months away overall. We're seeing very positive action from the FDA for the first time in 3 or 4 years. If this continues, that means there will be much more business to do with the US. The dollar obviously will help. So 6 months I give for the financials to kind of start to recover. Markets might start pricing that in a few, maybe 2 or 3 months from now. They've already started, but it's early days right now.
Deepak, couple of small pockets. Firstly, the Den networks and the Hathaways, I don't know how closely you looked at them off late, but when the Jio announcement came, it was almost, the obituaries were out there, written for both of these names. They were beaten out of shape, beaten down to a pulp. From there, I would understand a dead cat bounce if the stocks were to bounce 15, 20, 25% and then cool off. They are continuing. Hathway is northwards of 50% now from those lows. They've signed an interesting deal with Netflix, which lets Netflix come onto the TV, which is great. Then Networks today is up about 20% too. What gives here? I mean, was the market wrong in writing an obituary too soon? or would you believe this is an extended dead cat bounce, which at some point of time will fizzle away?
You know, these companies, I mean, I don't have the detailed financials, but the way I looked at them was their past financials were horrible. If you look at anything in the past, it's like, you know, those, you wouldn't touch those companies. But the promise was that in the future, all of the past will get wiped off. They'll be able to get a much better return going forward. This, I believe, is perhaps a little, early to say. And given that you've got a behemoth like Jio coming in saying, I will replace you guys, I think that will cause a certain amount of damage in their financials going forward in terms of projections. So while they've been beaten down a lot, now they've fallen 50% from the high or where they were when the Jio announcement came. So a 50% recovery, even if you did when from 100 you went to 50 and 50 you came back to 75, you're still 25% off the time when Jio's announcement came. So there's still a long way to go. I believe this is a real threat. Not just that, the availability of internet-based services being much more prevalent today than we have seen in the past. Today, for instance, I don't use any cable connection at my house. It's literally all the internet connected to the TV, and we're pretty much done with that. If more urban areas start moving down that route, the scale for them, which is primarily going cross-country and perhaps rural, will shrink a little bit. So I'm not very positive on their long-term future, and I feel that pure distribution channel is not perhaps the best way to be. The way to play the media game is to be a content provider, a creator, rather than a distributor. And that's where, companies like Netflix shine. We can't invest in them, unfortunately, but there are other companies in India that look interesting.
All right. Deepak, one last question before we actually let you go. What's your, what's your pocket of interest right now in the current markets? And, while we've been talking about, the high value stocks where the valuations were stretched, they've started to come off a bit. Does it seem ripe for entry?
Too early to say for the higher value stock, because consumer, because of GST, last quarter was really good, because 2017 was lousy because people expected that GST would start on July 1st. They moved their purchases to July 1st. So if you look at almost all of these companies from Dabur to a bunch of others, the June quarter was bad and the September quarter was fantastic compared to their pasts. So the September quarter for all of these companies this year is going to be benign because last year was much higher than ordinary. So I think there will be a cut, a cut in their prices when the results come in, or a little bit before that. Having said that, I think some expensive names are still worth it, like a Maruti, for instance. We're still very positive on the auto space. India has a long way to go. In the long term, I'm also positive on the electric vehicle space as moving more. Crude prices, the dollar increase will just hasten our move there eventually. So we are looking at those, some companies in that space, very early days. There is some interest now in pockets. For instance, paper. Companies are relatively lower valued. And we're seeing increase in dollar, which means the import costs of paper would have increased. So local players get a bit more benefited. They have been beaten down in the recent past. So at P's of 8 or 10, they become much more attractive to buy and hold, at least for the next part of the paper cycle. We're still positive on OMCs. We feel that they're able to pass on any increase in input prices to customers. So they're also trading at P's of less than 10, and they have a return on capital of more than 40%. So they are political. You have to give them a little bit of a discount for being political. But when you're giving a company growing 10% a P of 70 when it comes to an FMCG, and you give another company with similar returns on capital, a P of 6 just because it's a government-controlled company, I think that dichotomy will wear off over time. So longer term, I'm still positive on OMCs. That's not just for that, but multiple other reasons. We are picking some stocks in phases. We've been buyers almost all of this year, in different pockets of stocks. So positive on the longer term. Near term, there may be some hiccups. I'm okay with that.
Okay. Deepak, always good having you. Thanks so much for taking the time out, and keep up that commitment of cycling to office once a week. Boy, the country needs that.
From next week.
Yeah, actually, all of these weeks till the end of the year. Okay, that's Deepak Shenoy with his thoughts on markets and specific pockets. Just speaking of specific pockets, before we get into our next guest, just a quick mention of Deepak Nitrite. That stock is up about 5 or 6% in trade. Apparently, phenol costs across the world have gone up, so the import price of phenol goes up. Add to that the rupee depreciation, so that makes it even tougher. Deepak Nitrite, the largest phenol plant in India, has been commissioned, and probably that stock taking some moves from there, 7% higher, volumes above par as well, so do watch out for this one. We'll go to Hadrien and Brijesh on these names as well, but let's just get a critical discussion going on NBFCs. While the bond yields have been moving up, I think the last couple of days a bit of a cool off. I don't know if the NBFCs are pricing that in today, but the likes of Indiabulls Housing Finance, M&M Financial and a whole host of others have moved up today. Let's chat about this with Ritika Dua. She's the AVP at Elara Capital, joins us right now on the show. Ritika, good having you. Thanks so much for joining in. Has the base case for NBFCs changed over the last 2 or 3 sessions? Because yields have just cooled off a little bit. A lot of bond bulls were anyways talking about 8.21 or 8.3 looking a bit stretched, so they would be happy. But what about you? When you are factoring in NBFCs, has the base case for yields changed?
Are you referring to the cost of funds here? Sorry,
yes,
I
please.
couldn't catch the full question.
Yes, please.
Yeah, sure. So obviously we have been surprised on the negative side. We weren't building in such high an increase in the GSEC yields. So obviously there is some more room for the earning estimates to be downgraded, because we are still trying to understand where would the GSECs settle. So as of now, if I would say that we were thinking like 8% is on GSEC would be the highs, and we were building our cost estimates for most of the NBFCs on the basis of that. And if obviously if it has to go beyond that, and we think that this is more of a sustainable level, then the earnings have more room to for a downgrade.
Ritika, just comment on that, because most of these NBFCs now are looking at shorter tenure borrowings, which obviously bear the risk of repricing faster. So in terms of cost of funding for them, do you see additional pressure considering how the yields have shaped up?
Could you please repeat the question?
I was talking about how most of the NBFCs now have, to meet the liquidity demands, have started to use shorter tenure borrowings. The risk of that being the repricing happens faster. Will that bear down a pressure for them in terms of cost of funding, and then will that translate to margin pressures for them later?
Okay, so are you referring to the asset liability mismatch which has happened in the last couple of months, from where they are trying to move from the the short term to the longer term? Is that what you're referring to?
Yeah, in that as well. And I'm just generally talking about how
the rates on the
rates on the margin. Yeah.
Sure. So obviously, when I see here when it comes to NBFCs, so obviously the housing finance guys were having a more shorter tenor or more reliance on commercial papers. So that's the reason why we see margins for them coming off more sharply vis-a-vis the asset financiers, where I'm referring to maybe the vehicle guys or the other not the wholesale here, but just the vehicle in terms of asset, where they were not very much reliant on short term, barring maybe 1 or 2 names. So obviously this mismatch in terms of the shorter yield, shorter term rates catching up with the longer term, that's also been one of the reasons why the margins for housing finance companies are looking much more are more affected than that when it comes to versus what the asset financiers are going. And incrementally also for housing finance companies, liquidity obviously is like a concern. So if there are more spikes in the short term, while some of the finances on the housing finance side, say for particularly this quarter, so they have reduced their share of commercial paper, but that still remains quite significant. So obviously this means that on an incremental book, what you were trying to do earlier, you had you were trying to play with the short term and trying to safeguard your margins. Now even that short term benefit is not there for you, so that's also a pain, not just for the back book, which is getting repriced because your overall rates in the system have gone up, but also even in the short term because your CP rates have inched up as well. So overall, yes, I think margin pressure more for housing finance companies versus asset financers. And obviously, one of the reasons why the asset financers will not be that much impacted is also, still they have some room for passing on the costs to the borrowers, and this is what we are hearing from most of the companies who are operating in the segment. But when it comes to the housing finance companies, the room to pass on your cost of funds to your borrowers is very minimal. But then, yeah, a continuous hike by banks would mean that that gap might get reduced, but on and all, impact would be more for housing versus asset.
All right, Ritika, you've got a buy on Cholamandalam investment. You feel that the AUM growth is going to be, plus 20% over FY18 to 21. What is the other rationale for choosing a Cholamandalam investment?
Could you pardon your question, please?
Your pick is Cholamandalam investment. You like that you've initiated a buy on it. Can you explain to us what has led you to initiate that on the stock?
So yeah, we have a buy on Cholamandalam, and it's not that we are not building any compression when it comes to margin for Chola. We are building compression for Chola as well. But then for Chola, we think that if we see cross cycles, even in the last cycle, in the rising interest rate cycle, even Chola was impacted because they are also in a competitive segment. But the benefit is that firstly, for Chola, obviously they have a diversified product mix, so that helps you in terms of safeguarding your yields. Already, yields in the asset financing segment, like I was mentioning, they are at a relatively better position than housing finance companies to pass on the increased cost of funds to their borrowers. Now, when it comes to Chola, again, so like I said, I am building compression for Chola as well. But then right now, when it comes to Chola, another story is obviously the fact that we are looking at a much better growth when it comes to asset finances versus what they have seen in the last cycle. So if you see FY14 to 17 was a very bad time for auto NBFCs. At least for now, we are seeing more of at least a good growth for the next 2 to 3 years. So which being the largest driver, coupled with that better monsoon, still a lot of infra activity going on, and in the onset of elections, we think that this should not come off. So that is positive for the asset financiers. And also when it comes to Chola, they have already shown a good track record of asset quality, which has been again a concern for auto financiers over FY14 to 17. So for Chola, it's like a diversified book, helping you in terms of your growth. Right. Margin, yes, would come off because they are in a competitive segment, but then a lot of support on asset quality as well.
Okay. Ritika, one last question. Why do you like Magma FinCorp?
So for Magma FinCorp, so like I said, for Chola, the similar kind of tailwinds are there for Magma as well when it comes to on a top-down basis, when I see the growth across CVs or while tractors, they are degrowing, but then it's mostly the CV and the used CV and the used car segment where they are trying to grow now. The main reason for change in Magma, what we see is that obviously they have brought in a lot of changes when it comes to the underwriting process, when it comes to the use of technology, when it comes to the new management from, right from the top till the middle management. And that when we actually, cross-check with our checks on the ground, that is, helping them in terms of growth, and also growth not at the cost of quality. Secondly, when it comes to Magma, with the help of the Ind AS transition which happened this quarter, so a lot of cleanup has been taken up by the management, so that gives us the confidence that incrementally at least the earnings volatility to credit cost to some extent has come off. So we are obviously now waiting to see good growth numbers from them, because it has been a degrowth for some time. So clubbed with the restructuring on the management, on the underwriting part, and with some confidence on credit cost, we think that the earnings visibility is much better than what it has been for Magma. And plus, obviously, it gives the added advantage is the fact that they have raised capital at a time, and that will help them for the next 2 years at least, and the valuations are comfortable.
Okay. We'll leave it at that, Ritika. Thank you so much for taking the time out and joining us today and giving us your thoughts.
Thank you.
That's the view from Elara Capital on the NBFC space. Those stocks very, very active. Hadrien, Mendonca, we were talking about Indiabulls housing finance earlier. We're talking about NBFCs right now. 6.5% higher, 1221. What do you do here?
Yeah, the good part about Indiabulls Housing Finance is, the move has actually surpassed almost 3 days of losses that it, collected in the past 3 sessions. I think that's a very big positive. In fact, it is also moving beyond its 200 moving average. So currently, these short-term parameters are actually indicating that, it merits to hold on to your long positions. I think it is heading higher towards the 1280 levels, in the coming week or so.
Okay. Indiabulls Housing Finance almost nudging the 7% mark right now. Brijesh, a quick thought on Deepak Nitrite, that stock that we just spoke about, up 7% today.
I was just going through it when you were speaking about this Deepak Nitrite. See, the stock on the 4-hourly chart has formed a bullish flag pattern. A trendline breakout has been seen last when I have seen that it was somewhere around 271. So anything above 250 basis, any dip can be used for a buying purpose. The target for 1 month time frame would be somewhere around 320 plus. So definitely one can go for a buy side with the stop loss of 250, strict stop loss of 250.
Okay. Tell you what, let's slip into a break. On the other side of the break, we will talk about the Fab 4 stocks of the day at 3:15. We'll get you what dealing rooms are recommending in the session, and then some closing strategies from our experts. Stay tuned to Bloomberg Wind Live.
Good news, guys. Got a promotion and a damn good raise.
Congrats, beta.
Congrats, मेरी तरफ से भी.
From mama too.
वाह, raise. अब तो इंश्योरेंस पॉलिसी ले ले.
इंश्योरेंस? कौन सी कंपनी से लूं?
सोचना क्या? चूज वही जिस पर हो पूरा भरोसा.
वीरू, go for convenience. My company is online, quick and simple.
बेटा, but policy समझाएगा कौन?
वेबसाइट पे सब है पापा. I can even call and ask.
क्लेम सेटलमेंट का रेशो क्या है? मेरी कंपनी का 98% से ज्यादा है.
That's good, but आज की generation wants everything online. Easy premium payment options, loan facilities, और wide range of products.
अरे पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना. Same choice. LIC.
LIC trending with times. 62 सालों से हर generation की पसंद.
Talk about putting all our eggs in one basket? A few short years ago, we quit our jobs and started a business.
We then sold our home to fund the business.
Did I mention I was a new mum with a 1-year-old at the time? I'm Shubhra Jadda.
And I'm Vivek Prabhakar. And Chumbak is a labor of love
that we created from scratch. We may have started small, but today, we have more than 35 stores retailing over 100 categories.
And a cult brand that has the kind of appeal and consumer stickiness that any retail business would be proud of. It wasn't always like this, and we weren't always right.
Our story is full of color and light and love. Watch us as we share our story
on Aegon's of Business.
Aegon's of Business never stop. Only on Bloomberg Quint.
September 15th, 2008. The day a titan of the investment banking world fell. An event so unlikely that when it happened, it shook the world economy. 10 years later, the world has picked up the pieces. Or has it? Bloomberg Quint looks back at the collapse of Lehman, its aftermath on India, and the recovery that followed. Lehman, a decade later.
Kerala is tiding over the worst calamity that the state faced in a century. The intensity of the calamity and the losses suffered thereby are unparalleled. A preliminary assessment pegs the loss at around of rupees 20,000 crores. It is a humongous task to undertake various tasks of rehabilitation and reconstruction. Only with the wholehearted support and cooperation of all of you, we can rebuild Kerala. Your contribution, however small, will go a long way in achieving this goal. Please contribute to the Chief Minister's Disaster Relief Fund. We shall overcome.
Welcome back. You're still with us on Countdown. Markets seem to be maintaining those gains that we have seen from the start of the trading session. With the Sensex and the Nifty now actually up closing in at the highest point of the day, now convincingly crossing 11,500. Amongst some of the smaller names and the gainers within the broader markets, again, like we've been highlighting, it's the sugar stocks that have done really well today. So Bajaj Hindustan is up almost 20%, but Rampuccini, that's up another 13%. You've got a Praj Industries, which has gained a lot of traction in the last 2 or 3 trading sessions. For the last 7 days, Praj Industries has been up 32%. You've got Markson's Pharma, DV's Lab, which is doing well today, 5% higher, Syndicate Bank, and the likes of an AstraZeneca, which is also up another 4%. But let's find out now what's made it to Yash Upadhyay's list of the Fab 4 stocks in today's climbing market. Yash.
Good afternoon, Devina. So apart from the obvious sugar stocks, well, there's a lot of green on the screen. So we start up with Sun Pharma Advance. Actually, both the Sun Pharma duo are in focus today. Sun Pharma Advance, which is the research arm of the company, that's up about 4% today after the company came out with a joint statement that it has received the US FDA approval for its new drug, which is used in the treatment of open-angle glaucoma, which is an eye disorder. The approval is for its Halol unit based in Gujarat and would be sold in the United States through its subsidiary. RCF is up about 8.5–9% today after the cabinet in its meeting on Wednesday gave the approval to the company for the sale of its land to MMRDA. Ashok Leyland had surged more than 4% today after the company received a repeat export order for the supply of 200 air-conditioned buses from the Bangladesh Transport Corporation. And Vedanta, well, discovery of natural gas at the KG Basin, that is fueling the rally in Vedanta. It's up about 5% today, with volumes too coming in substantially higher. Back to you.
All right, Yash, thanks very much for that. So those were our Fab 4 stocks this afternoon. But let's get in a sense of what you can do in this market. Anand Tandon, market expert, he's joining in right now with his views. Anand, good afternoon to you. What are you doing in today's market, and probably from a shorter term perspective, do you expect the volatility to continue?
Well, obviously, assuming nothing major changes in terms of policy tomorrow, what we are likely seeing is, that we've just kind of had the currency blow-off happening. And the return of the currency has actually triggered local investments as well. So clearly today is a, buy everything day. I don't think that there's too much to be read in terms of the market after a few days of fall. We are just seeing a rebound from here. I think this can last a couple of days more perhaps before we begin to see some trends emerging. And my argument would be that, the longer term picture doesn't change very much. So, you will continue to remain pretty much in the similar sectors that you were betting on, which is that, the currency has depreciated and is likely to remain depreciated for a while. And therefore, exports will continue to remain robust. And of course, there are a few sectors in the domestic market as well, which will likely continue doing well.
Interesting. Anand, there's a strong bounce today in the financial names. For the last few days, they've been clobbered. So everything from NBFCs to private banks are moving up in trade today. Is this an indication of the market expecting that the rise in yields could be capped for now?
Well, there's certainly a case to be made for no further increase in interest rates, given the fact that the rupee has already depreciated significantly, and the inflation numbers look like they are coming off. It was always anticipated the second half of the year the inflation will come down, and therefore, there was no particular reason why RBI should be very hawkish. And given where we are on the currency, that would also take the edge off, because now that you're not looking at a runaway fall, and the fall has been somewhat stemmed, there is also the correction has also come through. So overall, there is a reasonable case to be made that there is no particular need to increase headline, interest rates anymore.
The other pocket, Anand, that we'd like to discuss is the oil marketing pack. We've been talking a whole lot about how this pack has actually not done much in the recent past and over this year as well, which means that the valuation is relatively attractive at this current juncture. Would you look at it, from a perspective of having a stock from the oil marketing pack in your portfolio?
So valuations are attractive, but you have to look at it as a debt kind of business now. It's not like the earnings projections are showing any great growth over the next couple of years at least. So, is it, should you be throwing it away if you have it in your portfolio? Absolutely not. The dividend yield itself will sustain prices at about the current level. Most of the companies in oil marketing are trading at between 3 and 5% dividend yield, which in itself is reasonably attractive. But if you're looking for growth, then this is not necessarily the place to be. So to a large extent, the question is, your outlook on the oil, will it continue to go up? Then there may be some more pressure. Or even if you assume oil remains where it is, if you expect that the earnings growth in other sectors were to taper off, or you were to move towards more defensives, then again there is a reason to be buying. But otherwise, not a whole lot.
Okay. Well, let's talk about some of these companies otherwise as well from a trade perspective too. Hadrien, Mendonca, all the three OMCs are up and about in the session today. If you don't have an existing trade, can you initiate a fresh one on any of these three names?
Yeah, so BPCL looks pretty interesting to me, and after seeing that very impressive hammer pattern in the previous trading session, we opened up with a gap, surpassing the hammer stop, which is a very good, positive development that we're seeing on a BPCL. I think on the upside, it has a small, hurdle around the 358 levels. I think above that, we would like to be aggressive longs on BPCL, and I'm expecting a short-term target of close to 370 to 375. So BPCL is something that I'm really looking forward to, once the 358 mark is broken pretty convincingly.
Hadrien, a couple of these mid-size IT companies have done well, nudging new highs. Intellect Design, second on a trot now, up 4%. And Sonata Software has some gains today, again nudging new highs. Any thoughts here?
Yeah, absolutely. Intellect Design specifically, I've been tracking the stock off lately, and we've actually observed a multi-year breakout on an Intellect Design. So I think if someone has a perspective of 6 to 8 months, I would definitely vouch for an Intellect Design, because according to the projections that I am seeing on the charts, we are expecting a target of close to 320 to 340. I think it will take around 6 months to achieve this target, but definitely the stock looks pretty strong. It is holding on to the breakout that we have observed, which is a very positive development. So Intellect Design is something that I'm really liking for a target of 340 in the next 6 months.
Intellect Design there. Vedanta is up about 5.5% in trade today. So the third best performing stock on the Nifty, 235 on the stock right now. Brijesh, are you tracking Vedanta? Is there a possible trade here?
See, if someone is looking for a shorter term time frame, then 226, 228 is a band of the support. And at the present juncture or any dip somewhere around 232, one can take a buy side with the target of 245 to 248. If someone is looking for a BTSC sort of thing, then 231, 232 is a support. Keeping that thing as a stop loss and look for the target of 241, 242.
All right, gentlemen, just stay on with us. It's that time where we go across to Yatin, who's been doing his dealing room channel checks and what they're recommending this afternoon. Yatin, good afternoon.
Well, for the past few trading sessions, we have been doing extremely well. In fact, the advanced decline ratio on the Nifty is also quite favorable. Almost 4 stocks gaining for every one declining. In the dealing rooms, Engineers India, that is one stock which is doing well, almost 5.5% up for that one, 132 rupees on good volumes. Dealers do indicate a buy today, sell tomorrow kind of a strategy. They expect the uptick to continue in the shares of Engineers India. In the pharma space, Wokhard is one interesting stock which is there on the domestic fund radar as well as on the HNI radar. 7% up for that one. Dealers do indicate that there could be some corporate action moving forward and the uptrend would continue here. So this is one stock which is on the dealing room focus zone in the future and option segment. And in the cash segment, Deepak Nitrate, we had Neeraj already talking about it. The Chinese phenol prices have shot up significantly in the last 2 months. In fact, from July lows, the Bloomberg data shows that there has been a 30% kind of increase in phenol prices. Of course, this is also to do with the fact that the dollar has seen some good strengthening, because of which the overall import parity prices are moving up on the back of good demand. So Deepak Nitrate is one stock which is in focus. They recently commissioned a very large capacity of phenol and acetone in Dahej, and on the back of that, the stock is doing well, almost 7.5% up for that one on a volume of 9 lakh shares.
All right, Yatin, we leave it at that. Thanks very much for highlighting those stocks for us coming in from the dealing room. Anand, just coming on IT and particularly amongst the larger names, while we've been seeing the earnings growth of TCS, largely being one of the leaders within the larger IT names, there are reports which suggest that the remainder of the pack, which is a Wipro and HCL Tech Mahindra, will likely end up, lagging the growth rate by the end of the fiscal. They're banking on the large deal win pipeline, but in terms of, the lumpiness of the large deal win cycle, do you see this being a slight detriment to the stocks?
Well, the underpricing of IT is now over, clearly. They've had a very good run over the last few months. And, therefore, automatically you are kind of pricing in most of not only just the currency tailwinds, but more importantly, the recovery that one is witnessing in the US, that being the major market for most of these companies anyway. That said, I think, given the paucity of other investment opportunities which are reasonably priced, I think the IT companies may continue to actually show some more upside from here, given the relative valuation gap, as well as the fact that they have much cleaner balance sheets. So on most counts, I think the frontline IT companies will continue to do reasonably well, though not the kind of performance we've got used to in the last few months. Of course, TCS has been the leader, but I would argue that Infosys is also rapidly catching up now, and HCL Tech, etc., because of their acquisitions and so on, will continue to report reasonably robust numbers.
Anand, any thoughts on this Deepak Nitrite that Yatin was talking about? Or, specialty chemical companies would be one more set of companies that will benefit from the rupee having fallen so much. Add to that, this company, of course, has the large phenol plant that they've commissioned. So I don't know if you track Deepak Nitrite individually or not. If you do, then great. If not, any other specialty chemical or the specialty chemical space because of the rupee depreciation alone?
Well, certainly, almost specialty chemicals has the added advantage not only of being export-oriented, but also benefiting from what we are seeing happening in China, which is that many of the chemical companies and complexes are actually shutting down for a variety of reasons, or at least are cutting back on their production. So that has opened up the space for a lot of Indian specialty chemicals, both including those, for example, which are feeding into pharma as well, but also the non-pharma ones, including dyes, chemicals, and so on. So certainly that is an area that will continue to remain in focus. However, the longevity of it is something that one has to look at, because only if there is a structural shift in terms of what is being supplied out of China it remains, only then you would expect to see that these companies will continue to remain to make more money going forward. Overall, I think it's a great place to be right now. Many of these companies have done exceedingly well, but in the overall theme of export-oriented companies, clearly this also is one of them.
Okay. That's the view on that space by and large. But yeah, today I think Deepak Nitrite is on a roll. Vinati Organics, the last few weeks after those very strong set of numbers, has been doing very well. And that stock has maybe pulled back a little bit, is no longer at those 1450 odd levels, but still at 1341 has given some serious gains over the last, over this current year. The gainers though, the list remains the same. Keep in mind, just watch out for Praj Industries as well. I was reading a note from BCL Industries. It's one of the other companies which manufactures, is a production of ethanol. And it's a very small company which has given a 100 crore order to Praj. Praj is arguably one of the few companies, or probably the monopoly of sorts, when it comes to ethanol manufacturing machinery. And this might only add, the moves from the government might only add to the order book of Praj. Last 7 days, about 30% move that has come into Praj Industries. Closing thoughts or closing strategies from our experts. Hadrien, to you first, your top closing strategy.
As I'll go with Britannia, the stock has fallen significantly in the past 2 weeks, and I think buy on decline, should be the strategy in a stock like Britannia. So this decline definitely, merits a good buy on a Britannia at these levels. I'm expecting a short-term target of close to 6,300, 6,350. Whereas stop loss should be closer to 5,920 levels. So Britannia is the stock that I'm really, bullish on.
Brijesh, what about you?
See, there are a couple of stocks which one can take for a BTST as well as for the short-term time frame. Now, the first counter would be from Autopack would be Ashok Leyland. Now, a double bottom formation has been there at the 124 odd level, and from there it has shooted up. Within this time, it's been increasing the volume. So right now, it's quoting at somewhere around 132. So if someone wants to play for a BTSA sort of thing, then 130 would be the stop loss, and your target would be 135 to 136. In the shorter term time frame, the stop loss would be 128, and the target would be 138 to 140 odd level. This is, I'm looking within a week time frame. The second counter would be no doubt increase in volume, trend line breakout, higher bottom formation, which is overall giving a buy side for the WOCART. So 675, 677, the stock has been quoting, keeping a strict stop loss of 665. Look for the target of 695 to 700. Anything on closing basis of 700, stock can jump to the level of 725 to 730. And another count of would be from a metal pack. Would be Hindustan Zinc 298, 299 has been quoting. Here your stop loss would be 295. Your target would be 308 to 310. This I'm looking for in a couple of days time frame.
All right, so quite a lot of closing strategies there. Ashok Leyland, Hindustan Zinc, and WOCART from Brijesh. Anand, one last question before we let you go. Are there any pockets where you'll probably steer clear of?
Well, the whole market seems to be, trading at a valuation which is 2 standard deviations higher than the mean. That should give you some cause for concern, given the fact that the difference between the earnings yield and the 10-year bond yield is now again more than 1 standard deviation away, and is at least touching close to 2%, if not more. So both of them are signs for discomfort. Within that, of course, you have to look at what can still be purchased. And I think things like insurance, etc., are areas which I find reasonably comfortable even now, besides the export stories we've spoken about earlier.
Okay, Anand, we'll let you go at that. Thanks so much for joining in and giving us your thoughts today. Really appreciate your time.
Thank you.
Amongst the IT names which are not doing well, we've been talking about winners all through and through. Cyient is not having a great day. Cummins India, non-IT of course, but Cummins India is not doing well, down about 2.5 to 3% in the session. Ashoka Buildcon down about 5.5% in trade today. And Jubilant Foodworks, Radico Khaitan are amongst the names falling within the consumption basket, which are not having the best of days. It's a bit of a lull here for Radico Khaitan. The liquor companies, Hadrien, have gone on a bit, gone off the boil. The Soames, the Radico Khaitans, the United Breweries, even a United Spirits has not really done too much. Anything that stands out as a trade at all?
Yeah, so McDowell's, that is United Spirits, can be a good short candidate. We have seen, a positive move on United Spirits today. And I think if you see the lower top, lower bottom structure that it is settled into, I think the strategy on United Spirits now turns to be a sell and rally. So I think the rally that we have seen 1.5% today should be a good opportunity, because solely for the reason is it has not even been able to surpass its 5-day moving average. That is the path that United Spirits has held on to in the past 1.5 week. So I think sell and rally should be in the short term for United Spirits. I think on the downside, we could expect targets close to 560 levels on a United Spirits.
Okay, Brijesh, I believe you recommended Wokhard as well. You would carry the call home, I'm guessing.
See, I don't play usually. I don't buy and I don't trade. But purely from a technical point of view, definitely, as I said, the chart are looking very much promising. The higher bottom formation has been there. So if someone is want to look for a BTSC or even for the shorter term time frame, 665, 660 are the support level. At the present is a 1 can take a buy call. Target would be 695 to 700. Anything now on 700 on a closing basis, 725 is a next level to watch.
All right, that's Wokhard for you, 675, one of the biggest intraday gains since 8th of Jan this year. So looking strong at the highest point of the day for Wokhard. Bajaj Finance also does well, 3.24% on the stock. Indian Oil, Grasim, UPL is up 5% today at 738. Hadrien, would you look at a UPL?
Yes, definitely. Today's move that we have seen has actually aided UPL to break out from a flag pattern on the daily charts, which is a very, very good positive point. Now, if you go to the weekly charts, we are seeing the second consecutive week where UPL has managed to, sustain above its declining channel pattern breakout that we saw 2 weeks back. So I think, both of these breakouts are indicating that better times are here to come for UPL. One can initiate long positions even at these levels. In the short term, I'm expecting UPL would, move above the 750, 760 levels. And on the downside, I'm expecting, stop loss of close to 710 to 715 zone. That is where, there is very important support for UPL. So definitely long positions, if you're holding, definitely hold on to them. If you're willing to open up a new position, you can also do that at this juncture.
All right, so UPL looks ripe for even fresh entry point according to Hadrien at 738 in the stock. Well, we are just about 2.5 minutes to go from market closing, so I'm going to quickly toss it over to Neeraj to run us through different elements that saw move in today's session. Neeraj.
Well, thanks a lot for that, Devina. So good going really for the markets today. The mid caps and the small caps too have done well, but the day belongs really to what the Nifty and the Nifty Bank have done. About 1.25% for both of those key indices. Bring up the mid cap and the small cap indices. Yes, they've done well, about 1.5%, but usually on a big day like this, you probably expect them to do more. However, the market breadth 1:4 in favor of the advances, so you wouldn't, or 4:1 in favor of the advances, you wouldn't complain too much. Let me bring up what the index movers have done. They will, of course, bring you up to speed with all that happened across the broader market universe. So, Indiabulls housing ending at the highest point of the day, good going. BP, HP, IOC doing extremely well for themselves today. The Bajaj twins too have done well. Finserv and Finance are up and about. Vedanta adding some meat, 5.5%. UPL about 5%. Asian Paints about 3.5%. Power Grid about 3%. So banks, defensives, a lot of stocks have participated, and this tells it all. Just 4 stocks in the red, and GAIL just by a whisker really. So you had 3 names ending in the red, almost literally 3 names. 2 of them being IT defensive, Coal India too, largely defensive. So great day for the market. A lot of beaten down names coming up in trade, and you'll probably find a lot of evidence of that at the broader end of the spectrum. The Nifty 50 stocks have done well, yes, but the broader end of the spectrum, Devina, peppered with gains.
Well, definitely, Neeraj, and you know, the indices themselves are up and about almost closer to 2% for the mid caps and small caps, but it's been all about specific stocks in today's session, and it's been the sugar pack which has garnered a lot of interest, a lot of volume action, and a lot of pricing activity. So amongst the top gainers, we have a Balrampur Chini and a Bajaj Hindustan. A Balrampur Chini which is up 13%, Bajaj Hindustan which is up 20%, locked in upper circuit, and that's not just the case for these two. Be it Dhampur Sugar, Mavana Sugar, Sri Lanka Sugar, the entire pack has been you know, laden with gains today. Praj Industries is the other one that I would like to talk about. That stock in the last 3 to 4 trading sessions, in fact the last 7 sessions, has done really well, and if you see the weekly performance, you'll see the kind of gains this one's clocked in. Today's session is clocked in about 10%. From the pharma space, a Divi's Lab and a Markson's Pharma, both these stocks do well, closer to 5% odd gains. Divi's Lab at 13.28, Markson's Pharma up at 38. We've got RCF on the back of the news. The stock did really well in the morning, though opened up with gains of closer to 17%, cooled off towards the end. You've got about 9% gains by the end of it. VIP Industries and ACC are the other two gainers. Within the losing pack now, there have to be some before we go across and get a quick check on the weekly close of the index. Amongst the losers, you have an IL&FS Transport, IL&FS Investment Managers, that's from the IL&FS group, and the bearing down that it had. Ashoka Buildcon and Wellspun Corp are the other bigger losers from the broader markets. But as Neeraj highlighted, the breadth has been extremely positive. 1:4 in favor of the advances. So today's session, nonetheless, has been quite promising as we go into trade next week.
And the world markets are not doing too badly either, so hopefully there won't be any negative disruptions from the world markets overnight. You know, while this is what we've done for the day, for the week as well, the gainers and the losers, for one, the Nifty, two, the mid caps and the small cap space as well, should come up on your screen. This is the index, and while the Nifty 50 ends marginally lower, fair number of stocks which have gained, an interesting set of names which have gained.
Well, looking at it, you've got, you know, the likes of Bajaj Finserv. Again, we were talking about how it's come off its peak valuation. There's been some selling pressure. But then again, towards the last few days of trade, the add-up started in. So for the week, the close, remember, it's a truncated week, so you had one less day of trade. So gains piled up for a Bajaj Finserv. From the IT pack, you had a Wipro that did well. And Wipro, actually, if you see the last week's performance, the stock actually was among the top gainer on the index. Amongst the losers, you had a Hero MotoCorp losing 4%. And a heavy cut coming into Tata Motors as well. So the auto pack as a whole didn't do too much.
Yeah, and the big boy Reliance too, down about a couple of percentage points this week. What about the broader end of the spectrum? Again, the mid cap index too, down about 1%. But interesting names here. Sun Pharma Advanced Research from amongst those names. You don't normally see Tata Global Beverages featuring in the top movers list, but that has done well. Max Financial Services, a company news, has done well. ICICI Lombard General Insurance too. So insurance finds some place here. Pharma finds some place here. Hexaware Technologies top of the line, about 6% higher in trade. Reasonable week for the mid caps.
Some losers though, but you did have a few NBFCs giving up in this week. You had a Chola Mandalam 7.5% lower. Amongst the power space, a Torrent Power down 8%. But nonetheless, the last 2 days of trade covered it all up with the kind of losses we saw on the day that the rupee actually slid at its fastest pace.
Yeah, I think that really sums it up. I just want to just one quick check on today's market and the turnover. And let's just see, because the volumes seem to be fairly high in a lot of cash market stocks. Just wondering if the overall turnover, no, not quite. It's actually been a low volume day relatively, Devina.
And even on the futures and options side, Neeraj, because you know, we've actually seen the short pile up that happened in the start of the week. That's sort of seeing some amount of covering, which has led to the pricing activity on some of the futures and options stock. And the NSE cash probably in alignment with what we've seen, a smidge below, but pretty much in line with the average that we've been seeing. Though the BSE cash market over the last few trading sessions has actually started to see a slight bit of a decline in terms of the volumes.
Yeah, well, interesting day of trade, interesting week for trade. Final thoughts from our experts. Hadrien, you know, the mid-cap index, the starting point today was arguably the lowest point of trade, and then it's only headed higher. How does that augur for next week?
Yeah, the Dow is very well for the mid-cap index. In fact, if you've noticed, it cracked below its 200-day moving average, and you know, in today's trade, it has once again managed to cross above it, which is a good point. You know, it is holding on to its long-term moving average. I think from here on, we could see a lot of action in the mid-cap, specifically even in the small-cap space. So I think focusing on mid-caps wouldn't harm, as far as the short-term trade is concerned.
Brijesh, your closing thoughts?
See, no doubt the Nifty has bounced back from a level of 11,250 and has been trading above the 11,500. Now, the previous swing high that was of 11,603, that has been, would be acting as a resistance. Anything above that, then again we are heading for a new 50-week top. Right now the 50-week top is 11,760, but we have to look out for 11,500 and 11,600 zone. Whereas the support has been concerned, 11,400, 11,420 should act as a support. So any dip can be used for a buying purpose. Even the best part is right now is that the banking index has closed above 27,100. So that has been a positive sign. So I think, like, since the next week would be again there would be a Thursday would be an off, so it would be a short week. But for a banking index has been concerned, I'm looking banking index touching 27,600 followed by 27,800 till it trades above 26,900 zone. So 26,900 would be acting as a support, and I'm looking at least 400 to 500 points of rally in banking index.
All right, Hadrien and Brijesh, thanks very much for joining in with your thoughts, and have a happy weekend. With that, it's a wrap on this edition of Countdown.
Yeah, from Devina and me and the team that put this show together, thank you so much for watching. But as we wrap up the show, here are Manish Sonthalia of Motilal Oswal with his thoughts on key facets of the market and certain important pockets.
Basically, the problems with the market is valuation on the P multiple side. So valuation is an issue. Earnings growth is coming out good. Q1 earnings growth was pretty decent across the board, whether the the headline benchmark indices or whether the mid caps and the small caps as a whole. And valuations are a function of macros, and macroeconomic indicators are all pointing southwards. We have a problem of a current account deficit, we have a problem of a fiscal deficit, and that is leading to lower valuation. Now, the predominant variable in the macroeconomic indicator, basically the currency, all of this manifests into what levels the rupee can go, whether the fiscal deficit or the current account deficit. This will all point towards where the rupee is headed. And we are closer to now. I mean, yesterday we actually touched, not yesterday, day before yesterday, we touched close to 72.90. And according to long-term real effective exchange rate, these are the levels where rupee should be. We are not really overvalued beyond 73. So if rupee was to stay at around these levels, we should see the markets actually turning up, because the only variable that is going to matter in the short to medium term now is going to be the levels on the rupee, and that will manifest itself in valuations on individual companies, individual stocks, but fundamentals, otherwise micros are looking perfectly fine.
Interesting. Manish, good morning. Neeraj here. So am I understanding you correctly that you're saying that if the currency stays stable, as long as it doesn't fall much, there are upside potentials to the current market?
100%. I mean, that's firmly my belief that if the rupee was to stay at around these levels, and we are looking higher on the markets, come what may.
Interesting. Come the RBI raising rates further, and maybe a hawkish commentary from the RBI as well, even if that were to be the case, because the jury is out on whether the inflation numbers stay benign or they rear a little bit towards the closer of 2018.
So the inflation numbers, other than fuel, are very benign, and we are looking at let's say a very good Kharif season also this time around. So other than fuel, that should not be too much of a worry. Having said that, I think interest rates were headed higher, 50 to 75 bips over a period of 12 months. Now it's going to be front-ended, and we have got to, the RBI is going to actually have an eye on the rupee as well, and from that point of view it will do what it requires. So from that point of view, you know, a front-ended pre-policy hike cannot be ruled out, and it's going to be working positive for markets rather than being on the negative side, because in any case 50 to 75 basis point hike in rates was already built in over the period of next 12 months.
Manish, the other set of names, and you mentioned that money won't flow out of consumers or otherwise unless the investment cycle picks up. So if you were to receive large pools of money into your schemes right now, where would you deploy it? A lot of quality names have come off. So we've seen the NBFCs, the likes of Bajaj Finance, etc., pull back at least 10%. We've seen private banks, HDFC, Kotak, pull back anywhere between 5 to 7%. And the staples have come off. We discussed HUL then. Staples have come off too, about 4, 5, 7% in the month of September. What is a favorite?
No, so, you know, the consumption themes will get the allocations what they have been getting in the past, and some of the names which you took, you know, we are buyers in those names. And you know, if there's fresh money that is coming in, we would tend to allocate in only those names, as opposed to, let's say, turning the entire theme upside down and maybe going in for commodities or state-owned banks. I mean, these look very good in present times, but you know, if you're putting in money for the next 2, 3, 4 years, you know, the themes that we have bet on have a long way to go. So whether it be the BFSI space, and within that the insurance, the private sector banks, the consumption names, both discretionary staples, I mean, these look quite good. I am given to understand that this festival season is going to be a blockbuster Diwali, so consumer names should get the benefit. It will get reflected in your quarterly numbers going forward. So the correction gives a good opportunity to just hold on or buy more of your favorite names that you have bought in the past.